Hello traders and welcome to the Trading Fanatic channel. I'm really excited to have you on this video because I'm gonna present you with some amazing tips regarding candlesticks, candlestick patterns, and actually we're gonna go a little bit deeper to understand the psychology of candlesticks, right? Because as beginners, we are provided those big lists of all those candlestick patterns that are a little bit too complicated and you actually don't need them at all, right? Because if you actually understand the psychology of the candlestick, formation as well, if you understand what lies behind that formation and what actually it means, right? It's not just about memorizing the pattern. Believe me, this is really essential for you if you are just starting out, but then as you progress within your trading journey, you have to look at them from a slightly different angle, all right? And in this video, I'm gonna try to provide you with as much value as possible and to really show you that it's not important for you to identify a bullish engulfing or to identify a morning star or one of those strange like three crows patterns or those sort of stuff. No. It is really important to actually look at the behavior of the candlesticks around the key levels and then to potentially take a trade from there. All right. So I am super excited about this one. If you are excited as well, first of all, make sure to subscribe, hit the notification bell in order not to miss the future educational videos and the weekly outlook and setups that I post every Saturday. And if you already did, let's see what we have for today. Alright, so first of all, it's really important to first cover the basics to illustrate what a candlestick is and to really provide you with the most fundamental parts of a candlestick that you should be monitoring. So jumping onto the next slide, what are candlesticks? Alright, so candlesticks are a type of price chart that displays the open, high, low, and close, right? Also known as OHLC of the price of an instrument for a specific period of time, usually time frame. All right, so when you flick through different time frames, the candles are gonna change, and I'm gonna show you actually how to read them while they change as well. But for example, let's say you are right now on the daily time frame and you see a nice bullish candle. So this bullish candle consists of 24 hours of price action data. All right, when you go to the hourly time frame, you have 4 hours. When you go to the 1 minute, every single candle is gonna represent just 1 minute of price action. So that's it, right? It's just a type of price chart, right? So then it is really crucial to understand where the candle opens and closes, as this will actually classify the candle as either bullish or bearish. All right, so you always have to look at the candle open and close. Usually you will have either green or red candles, maybe even white or black. And sometimes actually I used before, if you remember on one of my previous weekly outlooks, I used to use black charts. And this is going to be a little exercise for you at the end. All right, and I had questions. How do you know if a candle is bullish and how do you know if a candle is bearish? Well, of course, you have to look at the opening price and the closing price. And as well, those price points are going to determine the pressure of the candle, which we're going to have a look a little bit later. All right. Second thing to pay great attention to are the wicks. They signify either rejection or a failure to break above or below. Right. And on the other side, the bodies signify strength and control of the buyers or sellers. And we're going to have a look at all those different aspects a little bit later. All right. And of course, there are hundreds of candle patterns. Like there are big lists of all of those. You sometimes even have 5 candle formations. You have 1, 2, 3, 4, 5, like kind of. So for example, a candlestick formation can consist of 1 candle, 2 candles, 3 candles, 4 candles, and even 5 candles. Do you need to know all of those in order to become profitable? Not at all. And I tell you, not at all. All right. So if we have a look at a little bit of a psychology, here is a little bit of an illustration. This is a bullish candle. As you can see, the bull is right there. The price opens at the bottom. First of all, the market can push a little bit to the downside. All right. So on the, let's say this is a full hourly time frame, we might have a little bit of a downside first on the hourly time frame. All right. So this creates the low of the range. And this is the lower portion, which we call actually wick, all right, or shadow. Then the market strongly impulses to the upside. And this is when the market actually gains. This is when the market appreciates in value. And then it can reach a high, a specific high. But let's say there is a resistance on the left. It's going to encounter some resistance. And usually it's going to withdraw a little bit from that level. But this will create the high of the range, which is the highest point of the candle, right? This is also a wick on top. And then the price at close, this actually prints a bullish candle. So you have the opening, you have the low, you have the high, and then you have the close, as we have OHLC, right? And for a bearish candle, as you can see here, we have the bear. The market opens right there. Maybe first of all, it's going to push a little bit to the upside to create our high of the range. And then the market is going to depreciate in value, creating a bearish candle. And then we can come as low as this point right there. That creates the low of the range. But if there is some sort of support on the left, the market can withdraw a little bit to the upside and close right there, which actually creates the price at close. All right, so this is a pretty simple guide on the candlesticks, and I'm sure you actually know this so far because there are a lot of great videos on that. And if you are like really a beginner that doesn't know much about candlesticks, go check some other videos out as well. All right, but right now let's get into some cool details. All right, so identifying the candle behavior, this is super important because you actually don't need all those candlestick patterns. You just need to identify the behavior of each candle. So a candlestick usually can print in three ways. According to me, it can either be a pressure candle, which indicates a lot of pressure either to the upside or to the downside. It can be a rejection candle, which indicates failure to break above or below, meaning rejection, that a lot of people are coming in from a specific area, right? A lot of buyers are coming in this occasion that push the market up and form this long wick, which means a rejection candle. All right, and we can have indecision, which is usually classified by dojis, which we're gonna have a look just in a bit. All right, so as you can see, paying attention to the body and the wick, which we just set on the first slide, is really important because they show us the behavior of the price. If we have a super long body, then this means that we have a lot of pressure, a lot of buyers are currently entering into this market. And what we can expect the next candle to be, possibly another bullish candle. All right, if we have a long wick, again, it depends on the direction of the wick. So if we have a wick to the downside, this indicates a lot of rejection coming from the downside. And that is pretty important as well. And if we have a big wick on top right there, this indicates a lot of pressure coming from the upside. That means a lot of sellers are entering. On this occasion, there are a lot of buyers entering the market. So while the market was pushing to the downside, a lot of buyers came in and strongly pushed the market up, and actually the candle closed bullish. All right, and at first it was bearish, and we're gonna have examples of that as well. And then we have a small body and a wick, right? Small body and wicked candles, they are usually indecisions, and they're also called dojis, but this signifies that the market is indecisive and neither the bears or the bulls are currently controlling the market, and usually we will be waiting for some pressure to kick in some of the next candles. All right, so this is how we identify the candle behavior. We can either have strong pressure, we can have strong rejection, or maybe even medium rejection, or we can have indecision in price. So this is the candle behavior. And then let's have a look at some candle formations that I personally utilize, but I'm not really looking at them and I'm identifying them as, for example, this is a morning star. If you are watching my weekly outlooks as well, you will rarely see me, or hear me, I should say, speak about pin bars, speak about hammers, maybe a morning star or an evening star. I always talk in rejection, pressure, and indecision because this is the behavior. But again, those are the most important candlestick formations according to me. So first of all, we have a doji, which is again an indecisive candle. This is classified by a small body and long wicks. Therefore, the market tried to push up, failed, tried to push down, failed, and then closed exactly where it opened. So it signifies indecision. Then we have an engulfing candle. This is a strong pressure, long-bodied candle. This signifies a lot of buying pressure or a lot of selling pressure. We have a bullish engulf and a bearish engulf, and we are gonna use those a lot. And then we have rejection candles. So you can see I'm classifying them as rejection candles. You don't need to say that this is a pin bar, this is a hammer, this is a shooting star, this is a, what was it? There was another one, but yeah, they are just rejection candles. Why are they rejection candles? Because they have a long wick, either on the bottom or either on the top, right? And as you can see, the first candle, this signifies a lot of bullish rejection. So while the market opened right there, remember, actually right there, it strongly pushed to the downside. And then a lot of buyers came in on that price and the market strongly moved to the upside and actually closed bullish. And this signifies a lot of buying pressure coming from that level. On the other side, right there, the market opened right here, right? It first pushed strongly to the upside, but then a lot of sellers came in and then strongly pushed the market down, creating actually a strong bearish close and a big wick on top, which signifies a lot of rejection coming from the top. And then of course we have the evening and morning star formations, which are a great reversal pattern that I usually love to have a look at. It is a 3 candle pattern. So first of all, for a morning star, it usually happens at support and when the market is about to reverse to the upside. you're gonna have a bearish candle, usually trading to the downside, creating a little wick as well. That starts to signify that the market is forming some sort of rejection. Then the next candle opens, it will usually open bearish and it will try to continue down, but then all of a sudden it will form a rejection candle and it will strongly push to the upside, forming this bullish rejection. And then next of all, we're going to have a strong engulfing candle that will really show us that the market is starting to kick some pressure in the market and we are potentially about to reverse. And again, a little tip, it's always good to see an engulf of the bearish candle that consists the Morningstar formation. So for example, as you can see, this bullish candle closes above the high, so the highest wick of this bearish candle. And similarly, the evening star is exactly the opposite. The market is first trending up, but we are identifying a resistance level on the left. The market starts showing us some little rejection. Then it continues to push up, but the rejection gets a lot. And then we have this bearish candle that is actually a bearish rejection. If you want, you can call it shooting star as well, or a pin bar. And then the next candle usually should be a strong bearish engulfing candle that engulfs the first bullish candle. Sometimes it's gonna have a bigger wick as well, but if you have a look at market structure, usually this will be your high, this will be your high, and this will create a lower high. So if you drop to the 15-minute time frame, let's say this is a 4 hourly, you're gonna have an uptrend, you're gonna have a consolidation, and then you're gonna have a downtrend. And we're gonna have a look at that a little bit later. So those are the best candle formations that I personally love looking at. And I would totally recommend you to have a deeper look at them and memorize them as well. Another detail that we should pay attention to is, again, the psychology of the candles and to be aware how they develop between the different time frames, right? Because a few lower time frame candles can build one higher time frame candle. And this is super important because we're going to have an exercise on that. This happens across all time frames and helps us identify the behavior of the price better and even earlier, all right? Because if you have a look at the 30-minute right there, we're having the market open and it's pretty bullish. But as you can see on the top, we have a kind of a bigger wick. That signifies rejection. The next candle opens, tries to push up, but then fails and strongly melts to the downside, actually engulfing the whole body, the whole candle of the previous, right? And this is actually an engulfing candle that signifies that the market is potentially about to reverse. But this is the 30-minute time frame that consists of 2 candles. What if we translate this on the hourly? Let's say we again go to the hourly time frame right now and try to illustrate those 2 30-minute candles. It's gonna look like this. This is where the market opens. From the first candle, here is the market open. Then the market strongly pushed into the highs, created that high. Then the market opened the next candle. It was right there, tried to push a little bit up, and then strongly started melting to the downside, creating this bearish candle. And then as you can see, we're having a strong hourly rejection. But if we drop to the 30-minute, it looks like this. And if we drop to the 15-minute, you're gonna have 2 bullish candles and then maybe 2 bearish candles as well. So it's really important to understand this factor as well. And then finally, can candlesticks be traded on their own? Well, absolutely not, because candlesticks are just a way of reading price and identifying its behavior. You should be combining candlesticks with other tools in your arsenal, for example, support and resistance, supply and demand, trend lines, Fibonacci as well. It's super powerful to look at candlestick formations around Fib levels, right? So it's not just seeing right now a bullish engulfing candle and going long, or a Morningstar formation and going long again, right? Once price reaches your strong area of interest, a supply and demand, a support and resistance, trend line, Fib, we start to observe the candle behavior. How do they behave around that level? Are they rejecting? Is it forming rejection candles? Are they starting to get a little bit indecisive and running out of pressure, all right? Because if the market is strongly pushing to the upside at first, but then it starts to run out of pressure, so it starts to consolidate, then that is indecision, and that is a good sign as well. And then, of course, we want to see pressure in the opposite direction. So if the market pushes strongly up, consolidates, and then creates a strong bearish engulfing candle, then we have pressure in the opposite direction, which can as well tell us that we are potentially gonna go in the opposite direction that we expect, right? And right now it's actually time to get into the charts, because this is again a little bit of a theory. If you have any questions, make sure to throw them in the comments. I will be there to respond, and I'm gonna create a follow-up video if you even want more details. Right now, it's time for a few exercises that I wanna share with you. So first of all, we're going to do the black charts exercise in order to really learn how to identify candles and how to actually read better market structure. Then we're going to try to decrypt a higher time frame candle to a lower time frame one, all right, or a combination of lower time frame candles. And then we're gonna have a few examples of identifying candle behavior around a key level. So therefore, how we can get a trade using candlestick formations. All right, are you excited? Let's jump onto the charts right now. All right, finally here we are at the charts, and we're gonna have a look at some charts and of course have some examples. So the first exercise, as I mentioned, is having black charts. So what do I mean? Just changing all of your candles to black. And I actually have a little template. If I go to color theme, I have black. And when I click on it, you can see everything turns black. And if I just double click on my candles, you can see this is my body. Like, it's not entirely black, it's a little bit grayish right there. And then the borders and everything else is pitch black. All right, so this creates this beautiful chart right there. And this is really when I started to hone in on market structure as well, because once you have the green and red candles, you are really influenced by emotion. So you see a big bullish candle and you're like, oh man, I want to go long right now, but the structure is down. And again, if you still struggle with market structure, I will of course advise you to turn to black charts, because this will really help you to focus on the market structure and not that much on the candles. But again, you can see right now we have the black chart. So again, some of you can ask a question: is this candle bullish right there or bearish? Well, of course, how do I identify this? By looking at the open and the close. So we have to consult with the previous candle. So again, the previous candle closed right there. Then we translate this one onto the next one. It opened right there. First of all, it pushed to the downside and then it strongly impulsed up and again closed as a bullish candle. All right, so this is an upwards moving candle. And we don't need to know what the color is. Sometimes it could be tricky because you can have an indecision. So what is this candle right there? The previous one opened right there, closed right there. So this is a bearish candle. So this actually opens right here, tries to push down, then pushes back up and closes bullish. Why is it bullish? Because its open is higher than the previous candle close. So this is your close of the previous candle. This opens and trades up. What is the next candle? It opens again, pushes up and then pushes down. So it's a bearish candle. What is this one? Always translating the open and the close. I should say the close translated to the open and see where it closes, right? So we have this one. This is a bearish candle. Then we translate this onto the next candle. We have the open right there. The market pushed to the downside and then closed actually bullish. And then we have this big bearish engulfing candle that actually is pretty clear what it is. So this is how you can actually train yourself to identify the different candle formations. And we're going to keep to black charts, right, for the remaining of this video. Then the second thing I want to look at is the candle behavior as well, and dropping a time frame lower to actually identify what the market did. Okay, so let's for example take this big bearish candle. So what I want you to do is to try to imagine this bearish candle on the lower time frames. Let's say either on the hourly or on the 30 minutes. So how I would imagine it, again, where did the market open? So it was trading bullish. It opened right there. Okay, so this is our open. What the market did is it first pushed to the upside to create this wick. So let's say we have 1 hour of push to the upside. It could be even 2 hours of push to the upside. All right, okay, so maybe we can have 2 candles like this. So one a little bit smaller than one like this, or we have a 1 bullish candle. Then what happens is all of a sudden the market starts to reverse. So we push up and then we strongly start to reverse. Then we have this candle from here starting to strongly push down. Maybe this is 1 candle and then the next one could actually continue the move to the downside and close with a little wick on the bottom, something like this. Okay, so this is really, yeah, it's not the perfect drawing from my side, but this is how I would imagine this 4 hourly candle that consists of 4 hourly candles. Let's have a look. If I drop to the hourly time frame, it is actually almost like this. Okay, it was almost like this. So again, as you can see, we strongly push to the upside. We push to the upside. We have a little bit of an indecision right there. And actually, can you spot what kind of pattern this is? This is the textbook evening star formation. We have a strong push. We have an indecision. Price signifies that it fails to break above. And then we have a strong bearish engulfing candle that signifies long body, strong pressure to the downside, and it actually engulfed the low of this candle, which I mentioned as a little detail that is really powerful. And then again, as you can see, I marked the first candle to be the bigger one, but it's actually the opposite. The first one is a smaller one, and the next one is a strong downwards pressure. And I want you to do this. You can do this on every time frame. Again, let's take it a step further. Let's try to identify how this indecision candle looks on the 15 minutes. Okay, let's try to do that. So we open right there. Okay, we open right there. The market pushes a little bit down. first of all. Okay, so let's say we have a bearish candle. Then the market pushes up for one candle. Then the market creates that wick. So we have the wick created. And then the market potentially withdraws a little bit. And then we close a little bit above the open. So something like this. So again, this from my side, it's not perfect, but then we start from here. We turn a little bit bearish at first because you see this creates the wick. Then we create a little bit of a bullishness that actually pumps the market up. Then this candle, the third candle, creates the high, which is this wick. And then the next candle actually pulls back a little bit to create that wick and to close a little bit above the open. Let's have a look. Pretty excited to see what it is. Almost the same. So again, as you can see, the market opened a little bit bearish, pushed up. Then we have a little bit of a withdrawal. And it's not exactly as I said, right? Because I explained it slightly bit different. We started a little bit bearish. Then we had the bullishness. Then actually, yeah, this is the top. And then the next candle closes potentially where the market opens, right? So I hope that makes sense. And I want you to have a look at that practice because it works on every time frame. Final example, let's say, for example, you want to identify the behavior if the market is about to reverse. You start seeing the market slowing down, but first this is selling pressure. Why is this selling pressure? Because the wicks come from the top, but then we have this strongly push to the downside and then a big rejection candle from the downside. What does that signify? Is that there are a lot of buyers kicking in. And how I would imagine this candle on the hourly. So first of all, we open. We create a little bit of a high to create the wick. Then we strongly plunge to the downside, but then all of a sudden the market withdraws from it and closes right there. So this is how I would imagine this candle. Opens, creates the wick up, creates a strong move to the downside, pulls back and closes. Let's drop to the hourly time frame. Here we go. So we open a little bit bullish, we strongly push to the downside, and then we withdraw and close right there. If I want to take a step further, you can as well go down and identify the 15-minute behavior. Right? So this is a little exercise that you can always practice, and this is how you can actually see a candle on the hourly time frame and then immediately identify it on the lower time frame. All right, so let's have a look at some examples of candlestick patterns. So I'm gonna be pretty quick with that one. Let's say just for illustration purposes that we're looking at this resistance level. Let's say this is a really strong resistance level, and it actually is. Have a look how the market approaches it. So we have a big rejection candle right there, but the resistance level is not yet tapped. So we have a little bit of a sell-off, but we know that even though right there we have an evening star formation, we don't sell. Why? Because the market hasn't tapped our resistance. And then as you can see, a strong bullish candle into the highs to tap the resistance and left a wick. That wick actually signifies that there is rejection coming from that level. Then what do we have? We have a strong bearish candle. But then the next few candles, there are indecision candles. So what does that indicate is that the market is not ready to pick a direction. It's not ready to push down. And then just a few hours later, we have this strong pressure to the downside. What does that indicate is that the market is ready to reverse, right? So this is how you spot the behavior. But then the market decides to turn back up. What does that mean is that the market hasn't gathered enough liquidity in order to push to the downside. And again, the market pushes up, creates an evening star formation, but kind of fails. Right? Kind of fails to continue to push lower. And again, we start to pump into the highs, we grab order liquidity that is resting above bullish candle, and then we have a strong bearish candle to the downside that really indicated the sellers. Let's maybe take a little bit step back. Let's go to a little bit of a more of a trending market. So as you can see right there, the market broke structure to the downside strongly and created this resistance level. All right, oops, not this one, created this, oh, come on, man. Created that resistance level right there. We strongly pushed away from that level. Then we come back and we try to identify a lower high formation right there. First candle is a big wick. So can you imagine how this candle looks like with 4 hourly candles? It's possibly something like that. Right? Okay, so it opened right there. It strongly pushed to the downside, then it strongly pushed to the upside, and then it exactly closed where it opened. All right, so you have a big indecision right there. And if I drop to the hourly, yeah, it's gonna become messy, but this is what I definitely expect to have on the hourly. But then what you can see, the market tries to push up, fails to break higher. Tries to push up, fails to break higher. We have a little bit of a pin bar right there as well. And then we have this big sell-off. So all of that price action right there, all of those wicks to the upside signify that the market is failing to break above. If we translate this to the hourly time frame as well, here we go on the hourly time frame. As I told you, we have a big move to the upside, a big move to the downside. Then the market pushes up, and again, as you can see, the sellers start kicking in. Strong bearish engulfing candle to show us that the sellers are kicking in. then little indecisive candles indicating that the market is not really yet ready yet. And then we have a strong move into the highs, but what it did, it left a big wick. All right, this is a big rejection candle. So can you enter after this rejection candle? Absolutely yes, if you want to. But you are always gonna have, for example, let's drop to the 15-minute, where we can either take it a little bit of a step further. So again, what do you have right there? This big indecision candle that we just broke down. Then the market creates an evening star formation right there. You have all of those rejections. You have a pin bar right there. Can you take a short? Absolutely yes. You can take a short from here. You can keep your stop loss above in order to be safe. But what you can also do is you can wait for a clear break of structure. And this is when structure comes in play. So we break that structure right there. We create a lower low. So right now we're looking for a lower high that has to be formed just below that level, because this is our major lower high. Strong bullish candle. This indicates a lot of bullish pressure. We really don't want to enter after this one. A nice indecision candle, I would definitely love to consider that one, because this actually tells me that there are sellers coming in, but it's still indecisive. I really want to see a little bit of a bearishness, right? Have a look. The market strongly pushed up and then closed as a bearish candle. Again, this signifies that sellers are coming into the market. And I'm not trading an evening star formation. I am just trading this sell candle. A little strategy that you can do is you can actually place a sell stop below, then the stop loss above this candle, and if the market really continues to trigger that with momentum, then you're gonna get triggered in. Again, still indecision, so the market is yet not ready to push down, but we keep waiting, right? Then we have a lot of bullish pressure coming in, so the market is definitely not ready, and then all of a sudden we get tapped in, and then as you can see, the market is potentially gonna continue. But this is how you can utilize the behavior and the market failing to break above structure, right? So this is how we're gonna wrap up this video. It was a little bit basic, right? So again, if you need more details, please let me know and I'm gonna do more examples. Make sure to watch the other market structure videos, because once you combine market structure with candlestick formations as well, it really gets on a higher level, right? So I really hope you got something from those videos. Make sure to practice some of those exercises. Make sure to always take note of the open, of the close of the candle and the body, and of course the wick, because the wick again signifies rejection and the body signifies pressure. And this is all you need to know. You don't need to know that this is a morning star. You don't need to know that this is a shooting star or a pin bar or whatever it is. All you need to know is to read the market and the behavior of the candles. All right, so thank you so much for watching. If you enjoyed it, make sure to hit the like video, and I can't wait to see you on my next one.